But retail stocks still outperforming the broader market in 2023. Let's bring in JPMorgan's Matthew Boss. He's the #1 retailing and department stores analyst, according to Institutional Investor. Good to have you back with us. So what was your take on that weak retail number today?
Look, Scott, this holiday season and nothing new for retail continued to be a roller coaster. As a whole, holiday actually met our expectations, up mid-single digits. November started out softer with some of the lapping up against earlier demand a year ago. Black Friday was pretty off the charts. You then had a pretty deep lull in early December, and I think that's what showed up in today's report. But that week into Christmas, probably the best in a decade by our checks. So I think in the end, retailers got to where they needed to be. That said, promotions were deep. But I do think that retailers cleared through inventory to exit the year heading into 2023 in a cleaner overall position.
The last CPI suggested that apparel prices were up. And I'm wondering how is that possible for the very reason that you just suggested, that it seemed like inventory everywhere was piling up from the shelf to the ceiling.
So there was a big dichotomy, I would say, between excess inventory in the marketplace that was heavily marked down relative to full price, meaning on the luxury side, there were no real deals to be had. On some of the full price innovation from some of the core, stronger brands out there, you saw some very, very strong full price selling. So it was a very stark winners versus losers. Look, one of the things that we're focused on was the lull in December. And again, I think that was a big part of today's report in that those first 3 weeks of December, look, some companies out there have cited concern around self-purchasing. That's why we're taking a more selective stance into 2023. I think it's going to be a tale of two halves. You're going to lap up against some stronger economic activity in the front half of last year. Raw materials are still elevated. Freight is still elevated. So retailers and the consumer picture in the front half of 23, I think is going to be rough. Is going to be a pretty rough ride. Back half of the year, I think, is where there's potential opportunity on the horizon.
You seem to be, reading through the noise of this retail sales report, suggesting that the holiday quarter was better, or at least you feel better about it than the numbers would maybe suggest. But then how do you square that with what Lulu did and Macy's, right, when they were explicit about warning or lowering their numbers relative to the holiday quarter?
Yeah, so there's not a single company from an overall top line relative to initial expectations for the fourth quarter that really came in below. So some met, some were lower end, some were higher end. But as a whole, I think this holiday season, retailers are breathing a sigh of relief. And again, I think it was really driven by that gifting behavior, that seasonal behavior. I think the concern is the self-purchasing, and that between Black Friday and that week right into Christmas, we definitely saw a pause in the consumer. You saw a similar pause in the consumer in midsummer. And so I think as we move to 2023, we're taking a much more selective stance. I think it's value and convenience, which would be more the off-pricers, the consumer looking for a deal, looking for value. And I think it's best-in-class brands, the Nikes of the world, Tapestry, Capri. So I think self-help in 2023 is going to be one of the drivers that you need, because especially in the front half of the year, I think you're going to hear companies and retailers talk about a tale of two halves and the opportunity being more back-end loaded.
All right. Matt, I appreciate it. We'll see you soon. That's Matthew Boss, JPMorgan, again, top-rated retail department store analyst.